Welcome back, traders and investors. We have Tim Anderson on the line. He is the managing director at TJM Investments. Tim, how you doing this morning?
I'm good.
Good. We got a floor guy here, 30 years experience in the equity capital markets. Why don't you give us a little bit more of your background and what you're doing now in the markets?
Well, my background's been primarily in the institutional equity business, both on the buy side and the sell side, and currently I work for TJM Investments. I'm based on the New York Stock Exchange, and we do agency-only execution business for both broker-dealers and buy-side institutions.
So there are people that are still using floor brokers and talking what's going down on the floor. They're not all algorithmic traders trading in all these dark pools and different exchanges. There's people still doing stuff on the floor?
Well, there's no doubt that the population on the floor is down probably over 80% from the heyday in the early to mid 90s, but definitely there is still value-added information on the floor that people use around the opening, during the day, and you'll see when volumes get very heavy toward the last 15 to 30 minutes of the day. That's always a very busy time also.
Let's talk about the opens a little bit because, we talk a lot about the pre-market trading and, the openings for the first, 5, 10, 15 minutes of trading. Is that when you probably get your bulk of orders there and on the close, or how does it work out?
Yes, certainly we have numerous people that look for color around the opening and look for price indications on any day when there's going to be a higher or lower opening overall in the market, or any time there's news or a specific activity going on in a certain stock that's going to cause a price dislocation. We get multiple inquiries.
I think he hung up on you, Joel.
I think we just lost Tim.
Let's go get him, though. We can call him back, right?
We are going to get Brianna on that. That was, I know he was off the floor in the room. Hopefully we can get Tim back here real quickly. Let's just go to the SPOOs, though. Holy mackerel, man. This rally is not holding. Just was looking at the move off the number. We came back all the way to the close. I believe that we did get over. Did we match that pre-market high? If you were using that pre-market high as up, missed it by a tick. Got to 90.
Hi.
Hey, Tim.
I'm here, Joel.
Okay. All right. Sorry, we lost
Not
you
sure
there.
what happened. But
Yeah, don't worry about it. We were talking about the opens, but my next question, are you looking does someone call you up and say, hey, Tim, we got $1 million to sell here. Is there someone out here that would buy $1 million from us? Or is it more, hey, Tim, we're looking to sell $1 million, $2 million over the course of the day. These are our levels. Go shop it around for us.
Well, there's certainly times when might be working a large buy order or a large sell order for someone, and we don't really know the size of their total picture, and clearly they may also have some indications in some other pools of liquidity, or they may just entrust us to try to access other pools of liquidity that might be available during the day.
Do you get not held orders at all? Because I remember when I worked on the floor, to give the broker the discretion, meaning not held, go buy me, $1 million Twitter at 50, not held. Do you get those kind of orders, or do you get pretty firm just price orders that you want to get things done at?
The regulatory framework has gravitated to the point where almost every order is going to have some type of a limit on it for regulatory purposes. And, we do get instructions that range from being very aggressive to being less aggressive to being very passive to being 5% of the volume to being 30% of the volume, depending on how quickly whoever the ultimate order resides with, how quickly they want to be executed.
Okay. I mean, I know you do a great piece every morning, on the overall markets, taking the information from yesterday, analyzing that, and then, what to look for today. Just your quick synopsis of, the market today. Disappointing jobs number, but they seem to rally the market back. We were trading near the lows when the number came out, and we came back, just missed the pre-market high. Any feeling for the market, overall today in the direction?
Well, there's been a lot of cross currents this week, and the initial reaction to the jobs number this morning was almost a bad news is good news reaction, where people said, well, now clearly this throws a little water on the economy. We're not going to have a big push to raise rates sooner than anticipated. The jobs picture is not as strong as it has been. People were talking about this will be the seventh straight month of plus 200,000 non-farm payroll ads. We didn't get that. And, it's almost the market rallied a little bit. We'll see how that holds. I think that what the last 2 or 3 days have left us with is that the bulls have to be very frustrated, having had the Dow Jones Industrial Average each of the last 2 days in the morning above its all-time high of 17,138, and they would have, a close above that level would have given you your classic traditional Dow theory confirmation, where the Dow Transports has been making new highs this week. The Dow Jones Industrial is making a new high. The S&P 500 has made new highs in the last couple of weeks, and that could have easily set the stage for another leg up. But both days the market has faded throughout the afternoon. The advanced decline line yesterday went very swiftly from 3 to 2 positive between 12 and 1 o'clock to 2 to 1 negative by 3 o'clock. The broad market has been under pressure. The Russell small cap index has been under pressure. You got to give it a little bit of a break. It was up 35% last year in 2013. And NASDAQ has clearly been the leader, and they've been off for a couple of days. But NASDAQ has been up, maybe 18 of the last 20 days. You got to give it a break for a couple of days.
Market always needs.
I think today will be you're going to have there's a lot of cross currents. There's a lot of potential headline risk from the geopolitical theater, and you could have a little bit of back and forth action throughout the day, but it certainly seems like on rallies above 17,100, on rallies above 2,000 S&P, that people have been taking profits and lightening up on positions.
And that leads me to my next question. Do you are there some days where you're just or over a series of days or a week that you're just oh my gosh, I'm just getting all these sell orders, all these huge sell orders at levels and things like that? Does it ever give you, kind of inklings into where the market's going, based on what the large institutions are doing? Or on the other hand, when we had that big break back in late July and our early August, I mean, did you man, I'm just getting a lot of buy orders these days? Does it ever see that, or is it pretty much mixed on an everyday basis?
You see it more sometimes from if you're not getting any buy orders when the market's weak, or if you're not getting. There are so many players in the market.
Uh-huh.
I mean, my pad could be better to buy 4 to 1, or better to sell 4 to 1, and it could mean nothing because there are just so many players in the market today. I mean, there's maybe 5 to 6,000 hedge funds. There's thousands of mutual funds and money managers, and the amount of money that's out there in the market is there's so much of it. Sometimes it doesn't. What my pad set doesn't really tell you anything. Although, if the market's very weak, and you're not getting buy orders, or if the market's very strong and you're not getting sell orders, that's when you say this could really build on itself.
Okay, and
you're talking about volumes yesterday of 5.6 billion composite, where in late August, when people were talking about no volume, we were at 4.2 billion shares composite overall markets. Compare that to 15, 20 years ago, it's 20-fold.
Okay, and I just want to get your comments. New York Stock Exchange recently merged with ICE, and how's that transition going? And you think the stock exchange happy that they went ahead with that merger?
Well, I think many of the members are very happy so far. I think that the current owners of the exchange have been very vocal about wanting to bring more listings to the exchange. I think they've been reasonably successful at that, with Alibaba coming in the next couple of weeks and having landed Twitter about 6 to 8 months ago, and some other high-profile tech names that might typically be going to one of the other markets that I won't mention right now. And I think that the current ownership has also been pretty vocal about being in favor of some regulatory changes that would take some noise out of the market, i.e. the rebate model, or the so-called taker-payer model. And they've also, very interested in getting more institutional order flow directed toward the New York Exchange. New York still has by far the leading percentage volume of any of the exchanges, although nowhere near the 80% domination that it used to have 15 years ago.
Okay, one more thing for you here. I mean, order flow on the exchanges is definitely much different than it was before. The institutions are breaking up the orders in much smaller orders to not be detected. So this actually is reducing the liquidity on the book at any given time, with the institutional players not providing liquidity. Is this a concern to you?
It potentially can be a concern, although I think what happens is, they all have their alerts and their little signals that go off when stocks get to certain price points that they have a buy interest or a sell interest in. And, the question is, if you ever have an extremely rapidly moving market, how much of a time delay is there going to be between when a stock gets to a level where institutions might care, and then when they get to a point where they actually activate an order and get it into the marketplace somewhere?
That's an excellent point. Okay, Tim Anderson, Managing Director at TJM Investments, working as a broker on the floor for large buy-side equity hedge funds. Tim, thanks a lot for coming on. Great insight on the floor, and like to have you on again.
Okay, thanks, Joe.